Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on the Nasdaq stock market. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me this afternoon, we have Ryan McCormack, QQQ equity ETF strategist at Invesco, to discuss Nasdaq-100 performance and the biggest contributors to its weekly outperformance. Ryan, it's great to have you with us. Welcome to Trade Talks.
Hey, Jill, thanks so much. Great to be here.
Yeah, and if we take a look at our first chart here, the Qs versus the SPY, we call the Nasdaq-100 the modern day industrials, and certainly investors are taking a cue from that, putting their money to work with the economy, the digital economy that much of the QQQ is comprised of.
Yeah, absolutely. If you look at the week performance, QQQ up 3.62% versus the S&P 500 up 1.48%. Perhaps more staggering is the year-to-date numbers. QQQ up 21.04% versus the S&P down 1.65%. So you're talking about 2,200 basis points of outperformance. And you're absolutely right. I think what's happening is you're seeing investors recognize the value of these 21st century industrials in a quarter where most recently the third reading for Q1 GDP showed a 5% contraction. So again, investors are still sort of trying to digest all this economic news because it is a bit of a mixed picture. You have a GDP report that doesn't look that great, and frankly worries about Q2 GDP, as a lot of the coronavirus quarantines were put into effect for Q2. But you're starting to see some improvement. You saw a really strong non-farm payrolls report, 4.8 million for the month of June, and that was significantly better than May's 2.7 million, and a far cry from April's 20.8 million reduction. So tremendous numbers there. Additionally, you've seen on the initial jobless claims report, 12 consecutive weeks of that number declining. So you're starting to see, some economic recovery, at least some positive readings coming from some of these releases, but it's still pretty much a mixed bag. And I think you hit the nail on the head. It's people are recognizing the value of the 21st century industrials in this new normal that we found ourselves in.
Yeah, and you're certainly right. Should we get a halt in the reopening or even a reversal, these technology companies, they're not going to face those kinds of issues. Those are the companies that are keeping us going. The whole reason that we're able to record and communicate is because of that cloud technology, which is a big component of the Qs. Let's drill down on our next chart here and take a look at the sectors that are helping to drive performance.
Yeah, so again, it's Qs overweights, right? So communication services, consumer discretionary, information technology, right? They've been the main drivers for the better part of the past decade, and this week has kind of followed that trend. Beyond that, healthcare, we've talked about this quite a bit, and as you look at those four sectors, all four in positive territory for the week, and all four outperformed their counterpart within SPY. So what that tells me is it's not only the overweights to the Apples, the Microsoft, the Netflix, but the composition kind of under the hood, and some of those names that are not held in S&P, or just in general the larger overweights. But we've talked about healthcare a number of times. QQQ much more exposed to innovative biotechnology companies, innovative medical device companies, versus the S&P, which has much more exposure to that large cap pharma component and medical providers. So pretty great performance for the week, and it's the usual suspects in terms of the sectors that are leading that outperformance.
All right, if we take a look at the constituents, Tesla taking the top spot. I don't even know where to start with that one.
Yeah, the rise has been meteoric, and I think we have a chart next that will dive more into it. But this past week you saw Tesla jump on better than expected Q2 deliveries, 90,000 vehicles in the course of Q2. That beat most estimates for 83,000. Then of course you have your heavyweights, your Apples, your Microsofts that contributed to Q's performance. But the new kid on the block, DocuSign, landed in that list. And to your point before, DocuSign, a perfect example of one of those 21st century industrials, right? Kind of taking an existing problem, so to speak, and kind of turning it on its head, right? For e-signatures and their news today, where they're acquiring companies to expand their notary offering. So, the new kid on the block benefiting from the inclusion in Nasdaq-100, but again, offering a pretty tremendous service. And as you're looking at subscribers and revenue growth of that company, it's benefiting quite nicely.
Yeah, and if we take a look at your last chart here, Tesla versus the Qs versus the SPY, I believe, over the year, I mean, the move in Tesla has been quite incredible. If I'm citing this correctly, its market cap is now bigger than Ford and I believe GM combined, and even bigger than Toyota.
Well, I think as you look over the past year, right, QQQ up over 36%, certainly nothing to sniff at. S&P up nearly 8%. Tesla over the 1 year up over 500%. And this is in the face of course, what's going on with COVID. Of course, like a lot of questions around regulation of electronic vehicles, both here and in China. But in general, again, to keep harping on your point of the 21st century industrial, another great example with Tesla, right? A company with a number of different business lines, and a company that has garnered a larger and larger weight within QQQ. It's now the 7th largest holding in the fund. And I think it's a perfect example of, a company that has consistently kind of been innovative, brought innovative ideas to the marketplace, and been rewarded from the marketplace. And as a result, is rewarded with a larger and larger weighting within QQQ.
Yeah, it's really exciting to watch these companies and just how innovative they have been in times of a pandemic. They just don't stop innovating. Ryan, it's great to have you with us as always. Thanks for joining me on Trade Talks.
Thanks a lot, Jill.
And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.